Hello everyone, welcome to the Ichimoku daily analysis for the US dollar index for Tuesday, July the 6th, 2010. Well, a continuation of the trend to the downside. In the previous trading day we had a candle making a lower high and a lower low, a very small red body but a very long shadow on the top that represented downside price rejection. Today we have a larger red body, which means that the bears have made some more solid net negative progress on the day between the open and the close of the previous day. So a fairly bearish candle in terms of the size of the candle, of the red body. The market is still trading within the cloud, so we have an overall neutral bias to the market, but the market remains trading down below the Kijun-sen and Tenkan-sen, which means that the market is bearish in the medium-term and fast-term time frames. If the market continues to the downside, then there is potential for strong support at the 83.45 region, roughly, which is the bottom of the cloud. Now, there is potential for support anywhere within the cloud here, and certainly at the bottom of the cloud. We should be aware that there could be a breakout to the downside below the cloud, and that would change the our assessment of the market in big picture terms. A breakout to the downside in bearish terms would be quite negative in the big picture. And having said that, though, we need to be careful of breakouts above or below areas of the cloud that turn flat. Sometimes they can be false breakouts, so we do need to watch that if that does happen over the next trading day. Having said that, though, if the market does break out to the downside, then there is very, very strong support all the way down through various levels. We have a very large zone of support between 82.86 and 83.22 that held up fairly strongly previously as both support and resistance. And then certainly down below that to 82 there is strong support, and down to 81.84. And that 81.4, that 81.4 level coincides with a target from the breakout of the head and shoulders pattern that formed previously. Now, to the upside, if the market does rally, there is also some resistance offered by the top of the cloud, extending up to the top of the cloud around 85.30 roughly, and certainly at the Tenkan-sen around 85.12, and then up to the 86 level, and the Kijun-sen around 86.26.5. But let's bear in mind the trend is down. It's likely that the market will test the bottom of the cloud, so we do need to wait, see what happens if the market approaches there. But just beware that if the market does break out to the downside, we do have strong support down below.